Folks, I have a brand new and amazing speaker to talk about, Mike from Altos Research. He is deep in the housing numbers, charts, data. He puts it out on Twitter and on a YouTube channel. Mike, thank you for being here today. I look forward to this for a while.
Mike, great to connect.
Awesome. So we want to take this in 3 separate videos. I believe video number 1, we will give the audience what they want. We will talk about housing prices, median price, where it's at, what has it done? Are people shocked with what's going on? We could talk about the Great Recession, all of those things. Then I actually want to go to 2 variables that I personally think are more important. One is active inventory, and then probably the most important is new listing behavior. I think those other 2 actually lead to price, but everybody talks price with housing, so we might as well start there. What do you think, Mike?
Sounds great.
So when you talk about housing prices, and I know you put out data, right? These are not opinions on Altos Research. What has been the latest kind of data set that you put out on pricing?
So what we do at Altos is track every home for sale in the country every week. And so then we can watch all the prices, we can watch the changes in those prices, we can watch what the new ones are priced at, like all of those things. And and then you compare that. So like if I walk into the market today, like these are the homes and here's where they're priced. And that's different from a lot of the headlines, which are like the Case-Shiller index came out this week, and the Case-Shiller index is of sales that closed, and it was the end of May, and so this is the
March
number,
yeah,
right?
It's
June.
a little old.
It's a little old, but it's interesting, right? So like the Case-Shiller number this week said it ticked up in March, right? Mm-hmm. Prices ticked up in March. They were lower year over year, but they're ticking up in March. And so what happens is when we look at the active market, the asking prices of homes, all the homes that are on the market, like we were saying back in March and February, and actually in January, we're like, guys, like, home prices came down in the fall. Sure. But we could see that like there was inventory was restricted, and so that home prices were ticking up, and it's really hard to sometimes to be contrarian and bullish, right? Like it's like guys like so what we're doing is watching the active market. So the median price, I can tell you the median price for single family homes in the US right now is $450,000.
Yeah, and again, I want to be very clear, and I love what Altos Research does because it's the most up-to-date and relevant. It's the market today. And I want to be clear, these are list prices that you're really focused on, right? It's not, because you don't really know when it goes pending, what it went pending at. And then obviously Case-Shiller and others, they're on closed. So they're just farther in the process, right? You'll get a closed transaction, June 2nd. It may have gone pending, I don't know, 60 days ago or 45 days ago.
Yeah, for sure. So house is on the market now. It gets an offer in June. Maybe it closes in July. You start hearing about that in August.
Right.
And so but we can tell you right now what's happening with it. And so, we watch the active market. And when you think about any given home, maybe under or overpriced, maybe you get multiple bidders and it goes over, maybe it goes under. In aggregate, the asking prices are very close to where the list price, or where the sale price ultimately happens. So it's really useful to watch the active market. And
just so I can write it down, what was the number? Just so I can write it down.
It's $450,000 for single family homes in the US. That's unchanged from last week. This month, like right at the end of May, early June is about the peak of pricing, right? You get all the spring inventory, the best stuff. And then as you get later in the summer, like now there's a little urgency to get deals done before like school starts. So you see prices start to tick back down. So you get an annual seasonal curve like that.
Yeah. So again, this is why I love what Altos Research does. And I look at the data every week that you put out. So thank you and the team for doing that. It'll be interesting this year, given our next 2 topics, if that seasonality holds, because I believe one thing we're going to see as we go into the end of the year is rates tick down. My experience over the last 9 months is rates matter. 7% stops transactions, 6% brings everybody back. And obviously we're coming off 7. It rolled over to 6.85. We get a CPI number in 2 weeks. So I think rates are sub 6 by the end of the year. It'll be very interesting to see seasonality into a falling rate environment. What do you think?
Yeah, well, we actually had last year, we had seasonality into the rising rate environment. And so
Correct.
in July and in September, both of those moments in particular, we could watch ratchet down home prices. You could watch them ticking down very quickly.
Yeah.
And so what's interesting is now the headlines that are the price measures where it's like year over year home prices declined.
Mhm.
When you see those measures, that's they declined in July and September primarily last year, September, October.
Yep.
And then this year they're ticking up a little bit month to month. So yeah, so it will be interesting to see. And one thing that it means though is that our year over year comparisons get easier in the
Yes,
second half of the year.
for sure. Yeah. Yeah. That's
So
something that I called out January 2nd of this year. These are two of my housing calls. I like predicting the future, and when I'm right, I celebrate. And when I miss, I wear a shirt that says swing and a miss. So I own my mistakes. Here are two of my predictions. See how they feel. One, we are going to have 3 or 4 negative year-on-year numbers, Case-Shiller. Right. There were 3 or 4 months in the year, and we're right there, right? Next month, the next Case-Shiller report, which I think is May, whatever it is. It's so far behind, I get confused.
yeah, April.
It's going to show April. I think April, May, June, or May, June, July will be negative year on year because last year was so unhealthy, right? One of the markets I follow is Seattle or King County. The average of that market price to list was 112 for the month of July or June. That doesn't happen normally. Right. That's a sin that we have to pay for, I think.
Yeah. And it was even though we could see by June the market slowing, it was still had a ton of momentum
exactly
from the first half of the year.
Yeah.
Yeah. So right now the year over year comparisons are the worst, right? They're the hardest.
Correct. The hardest.
And so and it was really like to the end of May that they were the hardest. So yeah, we'll have those year over year. I think you're right on those. On the Case-Shiller will be year over year because it's been declining right through there, and you can see that coming in
Correct.
there.
Yeah.
Okay, so yes, I'm with you on that call for those next 3. But and what's going to be wild is that the headlines therefore will be Case-Shiller reports home prices are falling.
Can you just imagine, dude? That's too much. That is. And again, I want to be very clear because I've tried to tell my audience this is coming, right? I'm like, guys, be ready. The bears and the crash bros are going to come out of the woodwork starting next month. It's old information. You can look at the charts and go, wow, something really weird happened last year. We don't normally have 112% of purchase price to list price. That's abnormal. Usually it's 1 or 2%, either way.
Yeah.
112 for a market the size of King County, Seattle, that's gigantic.
Yeah. Yeah. So then and then we can see that especially once we roll into July, now our year over year comparisons start to get easier.
Yes.
Right. And so I think we'll start to see by the end of the year, probably like this is sort of surprising to say, like we might see by the end of the year over year home price gains.
Well, that was my second call. I said we're going to have 3 or 4 months. It's baked in the cake. It just hasn't shown up. But December to December will be up. It's going to blow people's minds. It's going to just going to be crazy. So.
Yeah, and I had expected. I have been, starting about May, June of last year when we could really see inventory rising. I was at that point. I was like, it looks like 2023 will be flat or down in home prices, flat to down a little bit. Sure. And so I suppose, it'll be right around flat. It's not going to be up big, but it'll be up a little. It could be up a little bit, but it's going to be right around that number. But it looks better now than I expected at that time.
Yeah.
Significantly better now.
Yeah. The other thing I wanted to talk about, again, given you have this price data, again, I talk to people every week, people in the business doing deals. I want to talk about kind of November and December of 2022. The market stopped, right? Transactions stopped. And that's one of the reasons we saw a bump in existing home sales to 4.4 is because we are blowing through inventory that's stacked up November and December. What happened in your data November, December? Because I had people just stuck with inventory, couldn't do anything. The market was literally frozen. What was Altos research data saying about November and December of last year?
The really interesting one is we track, first of all, we track inventory, right? So inventory usually peaks in late summer. Sometimes it's late August, sometimes it's September. We had in second week of September last year is when rates jumped from 5.5 to over 7 really rapidly. And so we saw inventory rising all the way into November last year.
Okay, so that was abnormal. Okay.
That was like way out of season, right? And so then you're looking at November and thinking, wow, if that trend continues, then we expect inventory to climb all through this year. But that reversed very quickly. And so you could see inventory climbing all the way into November. The other thing we could do is you watch the percentage of homes on the market with price cuts.
Oh, yes.
And so that usually also has its seasonal curve. You start cutting prices now. If it's been on the market in the spring and it doesn't get your offer yet, you don't want it to be hanging around late summer. Later in the summer, now you cut more. Now, right before the holidays, typically it's like, man, it's now rolling into November. We got to get this thing done. So you get max early and like in October, and then it resets for the holidays, right? Stuff gets pulled, and the market resets for the holidays. You get fresh inventory after the holidays, and it starts on its cycle again. And so we saw price reductions peak late November, early December last year. So they were still cutting prices past Thanksgiving. Like they're not like that. It was really, so then you think about what a leading indicator price reductions are. House is on the market now and it doesn't get an offer. So it does a price cut in June. And then therefore it gets an offer in July. Like those sales prices are going to be lower. And so we could watch that trend. And, there's the trend. The way I like to look at that is a rule of thumb, about a third of listings take a price cut before they sell. And so, sometimes that's intentional, sometimes it's accidental, whatever, right? But a third. And so when the market is hot, it might be 25 or 20%, a third think they're overpriced, but only 25 need to take a cut. And last February, it was like 16% across the country, right?
Wow.
That was still crazy, crazy, crazy hot. Then it slowed over 40. So then later in the year, now it's November, it's like 40, 41% need to take a cut because like and so it really felt, when we shifted from 16 to 40% with price cuts, everybody feels that.
Yeah, no, for sure.
And now we're back under 30% right now, which is right in the normal range. It's fewer price cuts now than say in 2019, right? So it's like a normal range of that. And that's because inventory is so low that the amount of demand there is buying the houses that are available.
Yeah. The last thing I want to talk about price and something I've been pushing on my channel is, simply speaking, when you talk housing nationally, it's always hard to do this, but something I'm trying to draw a line in the sand at the median home price.
Yep.
And saying below the median is on fire, no inventory, days on market's down, above the median slowing down. And frankly, the farther you get above the median, generally speaking, the slower it gets. So I call it luxury first time homes. And the move up market is just dead because people are staying put. Do you slice and dice by the median price? And we can, talk about above the median, below the median, any differences?
So what we do is in every market, we track every zip code in the country, and in every market we do 4 price range segments. So the high end of the market may be behaving very differently from the low end, right? And so, we can look at days on market for the high end, and also high end Fresno is different from high-end
Correct.
San Francisco, right? It's like, it's not a $1 million
It's
homes
not
here.
a number, right?
It's not a
I love
number.
this.
Yeah.
Right.
And so
Okay.
that's exactly what we do. And I think you're generally right? We can see the transactions are happening. If we look at the price of the pendings, for example, the median price of the homes that are in contract this week is 384,900. 380, just under 385.
Compare that with your 450. That screams the low end is on fire, the high end is slow. That's right. How you get pending at 384 and list at 450.
That's right. Yeah. And so you get more that build up at the higher end. But you also know, like, investor buy box.
Yes.
Right? Exactly, like, hey, guess what? 389 is right in the middle of that buy box, right? Like, you can see exactly where people are. Yeah.
Yeah. I think it's wild. There was a report, I think it was Redfin, that all the bears jumped on. 41 or 48 or 49% of investors' transactions are down year on year. I'm like, yeah, because that's the dumb institutional buyers aren't wasting money anymore. We're just getting mom and pop investors buying cash flow properties. Folks, that's a good thing. We're being better investors. I just like how people take headlines and make it all net. The doom out there is crazy.
It is crazy. And it's, it's like, when I think about it, there are some signals that the doomers are watching that I think are wise to watch.
Sure.
Right. And, affordability is definitely harder. Right.
Yeah, no, I agree. I say it all the time. Affordability is the second worst I've done a 52-year spreadsheet all the way back to 1970. And the only year worse than today is 1981. That's the only year worse. So it is horrible. I get it. Yeah. But that doesn't mean prices have to crash. I mean, it means transactions fall, not price.
That's exactly right. Like, it doesn't necessarily, it's surprising, but and the way I describe it is this way. I live in San Francisco, Silicon Valley. I live in San Francisco, and there are towns in San Francisco, like Palo Alto is a town of 50,000 people.
Oh yeah.
And it is unbelievably unaffordable.
Right? Oh yeah, like 1.8 for a 1950, ranch that's not been touched. Yes,
exactly.
I know it well.
Yeah, it is, and so Palo Alto is unaffordable, but for 50,000 people, there's like, I don't know what it is, the number, but off the top of my head, it's like 28 homes for sale.
Exactly.
It doesn't have to be affordable to the median income.
Exactly. There's 28 freaking homes.
Only 28 people. And we're actually experiencing that nationwide right now.
Exactly.
Normally, and this might be a good transition into our inventory conversation.
There you go.
Normally, there would be, like in the last decade, 1 million homes, 1.2 million single family homes on the market at the beginning of June.
Yep.
2015, 2016, like 1.2 million. And there are 430,000 right now.
Yeah.
Right. So it
folks,
doesn't.
Yeah. We're going to get into inventory in the next conversation. Mike, you and the team at Altos Research do amazing stuff. Where can people go find it? What is your YouTube channel, Twitter handle, all that good stuff?
So altosresearch.com is the website. And, if you're interested in using the data, we have a free ebook on that site, site.
Nice.
Yeah. So it's like using market data, using it in your business, understanding what the data is telling you. So they can go, and it's right on the top menu. They can go grab the free ebook there. And you can also get free reports for local markets. So that's at altosresearch.com. You can follow me, Mike Simonson, on Twitter, and the Altos Research YouTube channel.
Folks, if you want to watch the housing market, the most up-to-date are active listings. Altos Research is the only place to go get it. It's where I get my data. Folks, go get it. Mike, thank you so much. We will get into inventory in video number 2.